Hello traders, welcome back to the channel. This is Vishal and in today's video I'll be sharing my personal view regarding the market, especially regarding all different sectors like Nifty, Bank Nifty, metals, auto and thereon. First we'll be starting with the Nifty Futures monthly time frame chart. On the right hand side I have the monthly time frame chart you can see, and the left hand side I have the daily time frame chart. In the monthly time frame chart, you can see that the price overall is in an uptrend, no doubt about that. But you can see that price is still within this particular two different trend lines. The upper trend line is, giving resistance to the price. The lower trend line is giving a support. And you can see already this particular candlestick is looking like a shooting star, almost like one. So this shows that there is some sort of selling pressure coming up at the levels of 17,800 or the psychological 18,000 level. Now, let's have a look at the weekly time frame chart. In the weekly time frame chart, things are slightly different. You can see that this particular candle is a red candle and this is a hammer. Now, this hammer has come at a place where this particular 23.6% Fibonacci retracement is providing a pretty strong support to Nifty Futures. But we should also understand one thing, that this particular rally has been very fast. In a matter of almost 2 months, Nifty Future has rallied by almost 19% or slightly more than that. Generally, this sort of rallies we don't see very often in Nifty. And generally when the trends are very big in terms of its size and in terms of time, different type of correction is on the cards. Generally, there are two types of correction. I did explain this in my previous Nifty short-term view video also. I'll explain this once more. There are two types of correction. One is very, very extreme short-term like this one. Just a small dip and immediately market starts moving higher. Complex correction is slightly different. It's something like, it resembles something like a consolidation. Prices go up, they come down, again they go up, again they come down, somewhat like this. It's like overall consolidating. But if you see properly, the prices are moving lower and then suddenly you will see a new breakout also. And why I'm saying this, the reason for this is all these rallies which have happened in Nifty Future in last few months. This time the rally is very different. You have seen sectors like auto pack, FMCG pack, then you have seen mid caps, then even consumer pack. All these 3-4 sectors have outperformed very nicely. So as of now, the view seems to be that the trend is surely up in the weekly time frame. In the daily time frame charts, you can see, I'll just go to the hourly time frame charts now. In the hourly time frame chart, this entire band is giving a resistance to the price in extreme short term, that is from 17,688 to 17,800. And I had clearly told that once we'll have a close above this 17,800, only then we'll be able to see a rally. If this happens, probably 18,000 is there on the cards. But as of now, it seems very improbable because the Singapore Nifty also is showing a negative reading. And on the downside, I believe this low, 17,500, this is a decent support in extreme short term. If this particular level will be taken off, then I think we'll be heading towards 17,400 or maybe even 17,350 or 330. So this is in terms of extreme short term, but overall we are in a phase where, making money is going to be slightly difficult because there is a resistance at higher level at 17,800, even 18,000. And on the lower end, we have decent supports at 17,400 and 350. Yes, if this particular level is broken, then obviously we'll need to see even lower. But I think we should wait rather than predicting. We should wait for some time. If only this particular level is broken, then I will share my other levels with you. All right. Bank Nifty Futures. Now, Bank Nifty Futures is also in the same category, but it is slightly more better placed because overall momentum in Bank Nifty Future, overall the structure of the trend, I believe in Bank Nifty Future is much better than Nifty Futures. Even this is a candidate for, you can say, a consolidation phase or maybe a sideways phase, but it is still much stronger than Nifty Futures. And the candle over here, you can see, is a hammer. The candle over here, you can see, is a shooting star. So again, this is a time when we are capped by a resistance band at the upper end, and at the lower end, we have a support. So generally, when these sort of things appear on the chart, a pretty choppy market appears, and this particular choppiness is certainly going to be very fast. We will be within a range. Like if you see the price maybe after a week or a 2 week, if this consolidation continues, you will see that prices are at the same level. But the speed of the price going up and coming down will be too fast. So I think people should be very, very careful before initiating trades. Private banks. I think I don't need to speak much about private banks. The reason for that is it is looking almost similar to the bank nifty charts. I guess they are also a candidate of complex correction where prices will go up, they will suddenly come down, they'll go sideways, again they will go up again. So more or less we'll see a consolidation phase. The reason for that is we have a Fibonacci extension over here at 20,550, and at the lower end we have a support at 19,400. So this is a band of almost 1100 points where we can see some sort of zigzag movement or a sideways movement up and down. Overall trend, yes, it stays up in the weekly time frame charts, no doubt about that. And you see this 50-week simple moving average. If the prices go sideways, this will try coming closer to the price. And once that happens, we'll see prices moving higher. PSU Banks. Now, PSU Banks is one sector, I believe it's looking better than the private banking chart. There could be some sort of consolidation in PSU banks also, but somehow I believe that the consolidation will be slightly short-lived in comparison to private banking stocks. This is what I firmly believe. And stocks to look at will be especially SBI. This is the first stock. And the second stock which I like from PSU banking space is Bank of Baroda. So any sort of short-term dip which appears in this stock should be used as a dip to buy for a swing trade. Metals. Now metals have performed pretty nicely in the last couple of months. They have seen a steady rally. They have not outperformed like FMCG pack or a auto sector, but still you can see in terms of percentage and from high to low, you can see that within a matter of 45 bars, you can say 67 days, almost 2 months, the overall sector has rallied by close to 36%, right? So this is a pretty decent rally. Now in the weekly time frame chart, you can see that there is a doji candle and then there is a hanging man candle. And this particular candle has come up at a 61.80% Fibonacci retracement. And in the last few days, I believe there was a very decent pullback in stocks like Jindal Steel and Power. You can see this one, very sharp pullback, or even in the stock of SAIL, this was a very good pullback, even if you see Hindalco. So these few stocks, Jindal Steel and Power and SAIL, Hindalco, these have given very decent, good swing trades for the short-term trader. But overall, after this trade is over, if this continues, fine, it's well and good. But once it continues, I think again, the overall strength might remain, but some sort of sideways move will not be ruled out because even this particular sector has rallied by 36% in a matter of almost 2 months. And this is not a small thing, because generally any sector rallying in 2 months by 36% is a pretty nice thing. And we need some sort of consolidation. It is required by the market. And I believe as a trader, we should not be frustrated or angry for this consolidation phase, because we had very good 2 months or 1.5 months where we had a very good opportunity to make money on the upside. Autopack. Autopack, I believe, is again a candidate. If you can see, overall trend is still up. Certainly, I don't deny that. But some sort of consolidation cannot be ruled out. It is possible that maybe for 1 or 2 weeks you will see some sideways move, but in between you will also see some sharp pullback coming up. So if you find any dip in the auto pack in any of the stocks, if you are a professional trader, then out of 5 to 6 good stocks you can pick maybe 1 or 2. But yes, overall consolidation would be visible even in the auto pack, because auto pack has rallied pretty nicely. And on the downside, we have this pretty strong support. You can see from 12,383 to 12,100. This entire band is a strong support. So in case if it happens that the overall Nifty, overall banking pack and all other sectors start coming down for a short-term correction, this entire band will provide very, very strong support to the auto pack. Financial sector. Financial sector, I think in the weekly chart, it is looking very good. I don't deny that. Again, this is a sector which is trading between support, which is this trend line breakout, which has occurred. And on the upside, we have this particular resistance band. But in the short term, in the daily charts, I believe that the prices are much, much far away from the simple moving average, which is the 50-day simple moving average. So again, some sort of profit booking is required over here. This particular Fibonacci retracement will provide a very strong support at 17,600. In case if this is broken, we may see some sort of profit booking coming in the next few days also. But overall trend, the structure of the trend in the weekly time frame chart looks pretty good, looks pretty solid. Yes, if we start trading below this particular candle in the weekly closing basis, if we go below this particular candle in intra-week between Monday to Friday and again we bounce back, there is no issue. But once we start going below this candle, then in a post-weekly close basis, then yes, then there could be some issues, because then what will happen that this particular breakout which occurred was a false breakout, which should not happen. IT pack. Now, IT pack did bounce back, but what happened was only couple of stocks like Infosys or TCS, these two stocks predominantly, they performed. But apart from that, none other stocks tried to perform. All other stocks were silent. And even if they came up, I think not much strong momentum was seen. You can see Wipro just came up like that, just brought his head up and suddenly dumped down. So overall, if you see IT pack, it is clearly showing signs of selling pressure from this particular Fibonacci retracement. And in the daily time frame chart, thank God we have this particular support band. As far as we are trading within this support band, means above this support band, there is not a problem. But once price start closing below this support band, which is at 28,175, then you will see this correction which has started will start heading lower. Pharma pack. Pharma pack also, you can see that the trend is flat in the weekly time frame chart. The trend is also flat in the daily time frame chart, but we do have a decent support at this area, which is 12,330 to 12,210. Once we will see a close below this support band, then you will see prices heading lower. FMCG pack. FMCG pack, I think, is the sector which is requiring a lot of correction, a lot of profit booking, and if not a lot of correction, then at least it requires a lot of consolidation. And the reason for that is this rally from this point, from 13th of June to probably 16th of August, 2 months. I'm not talking from this top, this bottom to this top. I'm only talking about this particular rally. This has happened way too faster. If you try to calculate there's been almost, you can say, 21% in a matter of 64 days. And FMCG pack is generally a slow moving sector. So you can also see a high wave candle over here, a shooting star, and again a shooting star. And we are also trading at a Fibonacci resistance. You can see very, very clearly. In the daily chart also, multiple times we have seen higher highs in price and lower highs in RSI. You can clearly see this. So I believe some sort of profit booking, not just consolidation, but some sort of profit booking could be possible in the FMCG pack. But before this happens, I believe this high should be broken. Once this high will be broken on a weekly closing basis, you'll see some profit booking happening. And once this profit booking happens, I think again, FMCG pack will be ready again for some decent rally on the upside. But this correction is surely required because any rally in the stock market cannot happen one way vertical. There should be some consolidation or profit booking. Realty pack. Now, Realty pack is looking very solid currently in the weekly time frame chart. You can see a trend line breakout which has occurred. The only issue over here is that the candles which are appearing are not very promising. We have a high wave sort of candle. We have a shooting star. But the monthly time frame chart is looking very solid because this is a hammer. Even this is a hammer. Even this is a hammer. So too many hammers forming around a very strong support band and a big green candle. So this is a pretty decent sign. And in the daily chart also, if you can see properly, overall the trend is up and the prices are going up and down within this. You can see this uptrending channel. So the pace, the momentum is very, very slow of the Realty pack because everything is connected to Nifty and Sensex. When overall market, when Nifty is consolidating, I think most of the sectors will consolidate. So due to the overall sentiment of the market being slow and sluggish, there could be some sort of consolidation even happening in the Realty pack, but overall trend stays up. Till the time this particular uptrending channel is intact, I think the whatever dips we see in the Realty pack stocks could be used as swing trades for the long side. Consumption pack. Consumption pack, I believe clearly you can see the price is at 777.2.85, 777.2.85, and the 50 week simple moving average is at 7056. So this is a very big difference. I think either there will be a consolidation for few weeks, the moving averages will head higher, or there could be some minor profit booking happening. So again, same thing, some sort of profit booking or the consolidation. I don't want to predict, but it is certainly required even in the consumption pack, because you can see the consumption pack has rallied very, very nicely, and it is a very big rally. If we just try to calculate from this top to bottom, in a matter of 2 months, it has rallied by 24%. It's really amazing rally. So it is a candidate for consolidation or a correction. Mid cap, surprisingly, there could be some consolidation in mid cap, but somehow I believe the consolidation could be short-lived if we do not close below this particular trend line. There has been a very good breakout, and now, yes, for few days, not for weeks, but for few days, there could be some consolidation. But once the consolidation is over, and if you see some momentum, if this high is broken, then I think we are in for a pretty good rally in mid caps. This is something which everyone should remember, and this is a pretty surprising thing because generally speaking, the volatility is generally very, very high in mid caps in comparison to large caps. So when the large caps are due for consolidation or profit booking, and when mid caps are showing clearly that they are not going to consolidate for a very long time, yes, if this low is broken on a weekly closing basis, then all bets are off. But until and unless this particular trend line is intact, and maybe couple of weeks of consolidation is okay, but after that we'll have to revisit the chart once. But if this particular high will be broken, I think we'll start a very good fresh rally very, very soon. So I hope guys this particular educational video helped all of you to understand how markets will move in the next 1 week or maybe in coming few weeks. I'll keep updating all of you with my educational videos. Trade well and trade wisely. Thank you.